Hello, this is Jim White, and welcome to Opportunity Investing. We have a lot to talk about this evening, and we also have this very special guest that will be joining us to talk about and help us to make sense of opportunity investing and opportunity zones. We're also going to talk about the impact and I'm going to use the word opportunities that we have stemming from the coronavirus. Our special guest this evening is Ron Beit, and I hope I pronounced his last name correctly there. If I don't, my apologies in advance. Ron is the CEO and founding partner of RBH Group, LLC. And he's also the also the founding partner and CEO of RBH Management Company, LLC. And he's also the managing member of RBH TRB Network Holdings, LLC. Ron has acquired and developed, and he has and operated over 1 million square feet of commercial and residential real estate in numerous projects throughout the United States, as well as over 6 million square feet in institutional grade sites throughout downtown Newark, New Jersey. That's a lot of square feet, and having been in the development business myself for a number of years ago, I should say, that is a lot of work. Ron has also been very active participant in helping Newark become New Jersey's business and entertainment capital and a downtown 24/7, 7-day-a-week attraction. RBH in 2018 completed the groundbreaking Teachers Village project downtown and the Makers Village project in Ironbound section of Newark. In addition to developing the Rutgers Newark Honors Living Learning Community, RBH is initiating the Four Corners Millennium Project in the historic core city of Newark. RBH is now expanded into a national marketplace with Teachers Village projects planned and operating across the country. Teachers Village Hartford opened in May of 2019, and additional projects are in design in Chicago, as well as Norfolk and other cities across the country. RBH intends to invest its Teachers Village projects almost exclusively in QOZs, dear to my heart, QOZ, Qualified Opportunity Zones, and has created a dedicated fund to assist in providing housing affordable to educators in the cities in which they live and work. Welcome to the show, Ron. Thank you for your support. Firsthand, thank you for everything that you've done for the book and for everything that you've been doing. Yeah. So, first question I have for you, sir. Mm-hmm. What in the world and what day did you wake up and say, I got the passion and I'm going to be in the real estate development business? Now, I haven't been a real estate developer years ago, and I'm saying, it takes a special individual to take that on. And this Teachers Village concept, man, tell us about it. What got you started there?
So 2 questions in there, right?
Yes, sir.
One is a real estate developer, which I had the passion for early. I mean, I think I was 15 years old, and believe it or not, and no matter what your politics are, I read a book by our president when I was 15 years old, The Art of the Deal, and he went into the transactions that he was doing in New York City, and I said to myself, I wanted to do that. Mm-hmm. How I got from there to here has been a long journey, very long journey, I always thought my path into real estate development would be through law, and so I'm a lawyer by education. But while I did finish and was barred in New York and New Jersey, I actually got into real estate through property management. And one of my first assignments in property management, in order to get a building in New York City to manage, I worked for an owner that had a building in Newark, New Jersey, and from there. My earliest experiences in real estate were in Newark, and I was always baffled by the untapped, the trapped value that had not been realized. And really had a passion to figure it out. And and it's been a journey that led me to some of the projects that we're doing now. I think the social impact space, which is opportunity zones, right? When I look at down Newark a decade ago, what we were doing there with then Mayor Cory Booker, who's now Senator, who's a co-sponsor of this bill, that really was the predecessor of what are now opportunity zones. And when I think about those transactions and we think about how we were thinking about Newark in those days, it's exactly what was the motivation behind this legislation.
I happen to be a huge fan of Cory Booker. I absolutely am, and what him and Tim Scott did together, and like I said, I love the way you phrase it, regardless of what your politics. I don't care what your politics is. The bottom line is we have hidden value, and we got a lot of small businesses in these zones and these that need help. And this bill certainly helped us do that. And I'm since the bill passed in December 2017, I started devouring it. And I think I've probably, other than you, probably the only person that decided you want to sit down and read the tax code, right?
On January 4th, I think I read it on 2018, right after it came out. But Tim, I want to tell you what's important about the bill. And you mentioned Senator Booker and Senator Scott,
right?
And something that the senator didn't speak about in his presidential campaign, which is Senator Scott's a Republican, Senator Booker's a Democrat. Right. The work that was done in New Jersey, the work that was done in Newark, the Teachers Village was the first project that catalyzed over $1 billion of development in the rest of the downtown. It was all done with the same playbook that was created by then Mayor Cory Booker and Governor Christie. And again, a Democrat, Governor Christie a Republican. And when you look at this opportunity zone legislation, the beauty of it, right, passed in under Trump's tax plan and supported by Democrats, it's this bipartisan type work that, quite frankly, where we're sitting today in this, in the throes of this, pandemic and really the pain that this country is going through right now, it really is a reminder that the work that gets done is done bipartisan. The real work, the good work that gets done is bipartisan. And when you look at what happened in Newark, New Jersey, and what's happening in Newark, New Jersey, buildings rising out of the ground. Teachers Village, Newark was the first ground up residential buildings in 40 or 50 years there. The stuff that's happening there, the economic development, the job creation, the real estate, the property tax benefits that are now flowing to the city, and the city now having coffers to take that money and invest in education and healthcare and what the mayor is currently doing with those funds. That's bipartisan. I mean, that's the stuff we all want to see. And the only time it happens is when we do these smart bipartisan bills that have compromise. But this is the work we have to do. And opportunity zones is a great place to start when we think about what we got to do in the next decade.
I tell you what, I love your passion. You and I could be it could be very dangerous here.
Well, I knew you'd be able to handle yourself on your feet while I was trying to.
Yeah, we can be dangerous here. I love your passion, and I absolutely agree with you. And probably a shameless plug here. Not that I didn't have anything else to do, so I decided to start writing another book, the next big thing in politics.
Okay.
and that has to do with just exactly what you're saying. So I'm going to have to interview on that because. It's got to be. We got to talk to each other. We got to treat each other with more respect, and we got to knock off the nonsense to get things done, right? So that's probably another show which I would look forward to doing. Tell us about the village. What is the concept there, and to the extent that you can share, Ron? what was the funding mechanism? And I'm not to the extent that you can share, because I know we have some developers I know that are listening in today. And so, first, what is the teachers village, and then how did you go about the funding mechanism? Public, private? How did that go about?
So the concept of Teachers Village at its core, again, going back to Newark, trying to think about, sort of the first ground up buildings of 40, 50 years there, and really having, and really trying to think about, and I had assembled, before I started Teachers Village, I had assembled a large land portfolio in the downtown. And so before I even started Teachers Village, I created a plan for the entire neighborhood. And what I realized, and so when creating that plan, I started, and one of the benefits of Newark, one of the benefits of opportunity zones is that you get to, while these emerging markets, if you will, are behind the curve in terms of, development, it really is a nice place to be able to sort of think about what you want, think about what has worked, and look at lessons learned. And so we took those steps when developing our plan. And one of the things, I was the beneficiary of a rent stabilized apartment in New York City when I came out of the University of Wisconsin. And understanding that million unit, a million units of rent stabilized apartments in that inventory in New York City, what it did was create a middle class, a housing stock for the workforce. And so I knew in our first buildings in downtown New York, because we didn't have any, real estate developers like to work with comparables, right? Banks like comparables,
right?
Comps, if you will.
Right.
When we didn't have comps, we had to come up with a thesis that would work. So folks understood that if we could do workforce housing, that would work, right? Because when you look at your price relative to the region and relative to even some of the older stock buildings in Newark, you then have a comparable. And so why that doesn't work in general, right, is because you're artificially lowering rents to the cost of our construction costs are the same as everyone else. We're just artificially lowering our rents to sort of get to that benchmark. So workforce housing. We became fixated on workforce housing. We became fixated, if we're going to do a first phase with public investments, that it was the right thing to do. And so from there, it became, the thesis sort of evolved into, okay, if we're going to do workforce housing and we need to show folks that we have demand, we only need to look through our kindergarten through 12th grade district school system in Newark to understand that we have a dedicated demand of 5,000 to 6,000 people, teachers at the time, all of whom are coming into Newark already, right? All of whom were not affected by the stigma, and all of whom were working long days and traveling throughout the region. And so we decided that, and then in Newark, uniquely, we also had about 11,000 faculty and staff at the university system, where we have Rutgers Newark and NJIT, and so we have a 50,000 student college system, and so we had another 11,000. So all of a sudden, the equation to my lenders was, I got a dedicated demand of 17,000. I have 203 units here. I only need a relatively small absorption. And so we developed this community around educators and education. And so that's at the heart what Teachers Village is. From a financial standpoint, it's a public-private partnership. And the problem with workforce housing nationally is we've had a very you can debate the quality and the location of the affordable housing, but we've had a very successful affordable housing program and the low-income housing tax credit from the federal tax credit that we've had since the 80s. And it's been a very successful program. We all, obviously, this country is very well versed in private real estate and the capital markets to finance that. The workforce does not have that. So when you ask me what is the sort of financing mechanism, the special sauce is in cobbling together public investments in a way that you can secure the private capital in a way that is affordable to teachers. And so it's different from district to district. So, we finished the second Teachers Village in Hartford, Connecticut. That was a totally different capital stack. We have the third one that got approved in Chicago, and we have a different capital stack there. And so it's really having an ability to marry the private and public investments, and sort of the opportunity zones help, sort of us, the developer, in a limited capacity. We get a couple of basis points of what we call sort of gap financing.
Got it.
But that's not the greatest benefit of the opportunity zone program for us.
I know you are looking at or in planning stages in a village in Stockton, California. Is that correct?
So we are looking in Stockton. We are in early conversations in Stockton, California, with a group of stakeholders in the community, and are eagerly exploring an opportunity there.
And reason I brought that up because Stockton, as people familiar in the industry know, had some real challenges here some years back. And they got a young mayor in there that I think is just doing a phenomenal job. Just a phenomenal job. And the recovery, and if that doesn't restore your faith in I'm going to say the younger generation, and I refuse to tell anybody I'm getting old. I'm not. I'm just getting more seasoned but it's fantastic to see what's coming out of Stockton, and that's in the book, as you well know. That's what we did. We put some case studies in there, and be able to say, hey, here's the opportunity. Now, your project's going forward. When you're looking at the private public side, are you still looking at that mechanism in QOZs?
Yeah, in this day and age, only in QOZs.
Got it.
One of the like I was saying, the 3 basis points, while it's helpful, that's not the real motivation around sort of what's so exciting about this opportunity zone program. And quite frankly, it's gotten an unfair shake a little bit.
It has.
It's got, and the reason being is, listen, it's never perfect. When you're looking at census tract data, right? It's backward looking. Things happen in communities from when you're looking at backward data. And so, right off the bat, we knew that you were going to have, projects that just didn't fit the mold. But quite frankly, all the good programs had the same thing, right? Even the New Market Tax Credit program had issues like that before the data caught up with the census tract. But the beauty about the opportunity zone, so it's gotten an unfair shake, but the beauty of this program and the fact, and where I see the sustainability of this program and the success of this program is in 2 different spaces. One, why are we looking at Stockton, California? Because an exciting mayor and a district school system and the Bill and Melinda Gates Foundation and a bunch of community stakeholders got around the table and said, how are we going to maximize our opportunity zone? And reached out to us to ask us questions about Teachers Village. And that's how we got into the conversations we're having with them now. And my point is that it's organizing communities around their opportunity zones. And so right there is the first thing we look for when we go into a community. So that's been a huge benefit for us. We can sort of go out there. We know the communities that are organized because this stuff is hard work. It needs the community. It needs the stakeholders. And you got to have, and it's got to be organized and rowing in the right direction in order to have these difficult projects get out of the ground. So one of the greatest benefits is that sort of organization. The second benefit, one of the other benefits, is that it's just opened up the arena of investors that are looking at this stuff. They'll take the time to look at this because of the tax benefits. It is, listen, the tax benefits is tail wagging the dog. No one's making an investment decision just by the tax, incentive itself. But what it does is it keeps that investor at the table long enough to understand the capital stack and the pro formas, which are, have to be market, right? And so that
Right.
once they cut through a little bit of the difficulty, they understand that it's just like anything else they've seen. And then when you layer in the fact that they get the tax benefit and the social impact that they're creating, more and more investors are getting very excited about the program. So, so while it's gotten a bad rap, it's the program, I believe, strongly sustainable. And it's going to be very successful. And when you think about the time we're in now, COVID-19, and this pandemic and what's going to come out of here and all the stimulus and economic development we're going to need here, it makes sense to sort of focus in on opportunity zones where communities are already organized and their stakeholders already sitting at the table that know how to do this stuff.
I absolutely agree with you. And discussions I have most every day when we're talking to potential investors, whether it be accredited or the institutional, and even in some of the communities, is lack of education. And the press the press, all the thing that they jump on is the bad, and they throw around the 1%. It's just another thing, and it's not that. So my mission and yours as well, I know you're so excited about the projects coming forth, is we've got to educate. And that's one thing. It's the only reason I wrote this book was an opportunity to try to throw it out there, have some education, throw it on the table, get on every show that we can do, because it is a sustainable program. It is, and it's like I said, it's not perfect,
right.
But it is a program. And with people like you, and you need to be taking this show on the road, because you're in it knee deep, and that's the reason I was so excited when you gave us some support behind the book, because you're in the trenches, and I appreciate that. If you could give any advice, and to the extent that it's not obviously proprietary, to developers that's looking to get involved in the QOZ and getting involved in development, and they're out there trying to find the right funding, the right investors to get involved in their project.
Yeah.
What advice would you give them?
Listen, I would say this: it's not easy work. It's not easy work. That being said, it's worth it on so many levels. You will, developers from market to market now are struggling with community support. Right. Everywhere you go, you need this entitlement and that entitlement and this community group. You can halt your project. So, it's really the challenges in putting together these capital stacks. While it's challenging to put together these capital stacks, when you do the right project with the stakeholders and going with the stakeholders, they facilitate that back end piece. So the risk equation changes slightly, but listen, I think that developers are chasing after returns in these in these core markets, and chasing after land and chasing construction costs, and really are taking much more. When our projects, while they're hard on the front end, right, to put that capital stack together, while it's hard on the front end, when you think about the sort of back end of this, where I have 70-something% teachers in my community, and we don't have. Listen, you always, it's not a function of if I'm going to lease up. It's when I'm going to lease up, right? It's not.
Right.
I don't have that lease up risk, and where other developers, trying to chase, these sort of top line numbers, have a lot of lease up risk. Most of them flip to condos because the equation doesn't even work for rental. So if you want a long-term portfolio and you want rental housing in your portfolio and you want to build this stuff, this is the stuff to build. You have a very little lease up risk. On the downside, you have a lot of downside protection. I mean, I'm living it right now. I'm living our thesis, right? In our portfolio. 70-something% teachers in our communities, they did not lose their jobs in this downturn, right? We're not giving rent abatements because the teachers don't need it. They have not lost their jobs. They have not missed a beat. They're not at risk of losing their jobs. And so 70% of our communities are downside protected. And so when you think about the investment, and then you think about opportunity zones that create this 10-year horizon, and you think about the emerging markets that you're in, there's downside protection and significant upside in these emerging markets that you don't have in other markets, in these core markets that you're building in. So what I would say to you is, while it's hard on the front end to put these capital stacks together, the rest of the development itself is really a really interesting counter-cyclical investment that people are understanding now, and more investors are gravitating to.
Mm-hmm. Are you seeing much institutional interest in this program, or just primarily accredited, just single individuals, or any? That makes sense? That question makes sense?
Yeah, it does. It does. So the early adopters and the early investors are twofold. Yes, accredited investors, high net worth individuals that have capital gains, that are interested in looking for generational planning, really, and where that sort of, they're not really interested in the last year, the 15% discount, and this year, the 10% discount, and the deferred capital gains is not sort of what they're playing for. They're really playing for that sort of capital gain shelter after 10 years. So when they think about generational planning, that's very intriguing for them. And so the high net worth individuals have been the early adopters. But there's been an ecosystem around social impact investing and around affordable housing. So institutions like the Goldman Sachs Urban Investment Group or Prudential Social Investment, who have been in Prudential Social Investment has been in this business for over 100 years. But Goldman Sachs Urban Investment Group also, early 2000s, I think, in this business and this ecosystem of social impact investment and this community-oriented developers. So there is this ecosystem, and those institutions were the first adopters of this stuff. They know how to do it. We've been doing it. Those are, sort of historic partners going back well over a decade now. And so I think, and the CRA departments of banks, they know how to do this stuff. I think, the sort of institutions that are trying to get into the game are getting into it now, and unfortunately probably will slow down for a little bit based on the economic cycle we're in now. But, really we're waiting for the rules and regulations to come out and be ironed out. I think the early adopters were adopters that worked with these programs before, kind of knew where the rules and regulations were going, knew how to protect against the new rules coming out. The new market tax credit world was a predecessor, really, that a lot of these rules sort of were inspired by. And so I think it's, I think your early adopters have been sort of, yes, those high net worth individuals looking at generational planning and that ecosystem and those institutions that were in that ecosystem of affordable housing, social impact investing, and sort of community oriented development.
I love the term, the early adopters. We're seeing the same thing. We're beginning to get some interest because, and in our fund and some of the companies I run, we're in the ag industry, as I think you probably know, and we have some cold storage facilities and et cetera. And we got a project, and we're not going to get into it, but we got a project in Salinas that we're in the process of doing. But where I'm going with all of this, I'm going to go back to the supporters in the education in the city. And again, I oftentimes get myself in trouble with some of my fellow councilmen, we call them in California, and our mayors. We're finding a lot of, when we talk about opportunity fund or opportunity zone, they haven't a clue what I'm talking about.
Right. Yeah.
Not a clue. and it's right in their back door. And then I'll pull up a map and say, here it is. So, and then get in the permitting process, and we could probably talk for days and months and weeks on that. But for example, for people not understanding the benefits of the zone and getting investors and getting stakeholders involved, the amount of money that's going to pull back into the community from, like I said, job creation, other taxes, and et cetera, et cetera. But again, it's about the education. And we are also seeing bigger interest from the private side, like I said, from the large institutions, pension funds. We're beginning to see some interest in some of it, because in California, again, what's the biggest problem we have, especially for as low income housing, right? So we're looking at a few projects there, and at another time, when you can, I'm going to call you up and pick your brain on some different ideas of what we might be able to do in the Salinas area. So I'm just, I'm shameless. I'm going to ask you. I'm going to call you and say, how did you do this? Right?
Please.
We could do that.
Yeah.
Other projects you have in the works? I saw one that's kind of a mixed use project. It's got a hotel. What did I get that right?
Yeah. So the hotel component is probably coming out of it, but we do, like I said, we have a much larger plan for Newark, and we're doing all kinds of things. And I can't talk about yet what we're going to do, but it is a mixed use project, 2 buildings in downtown Newark. We are going to have our social impact bend and a new concept. We look at Newark as our sort of incubator. And we're going to have a new concept, very exciting, that we'll probably be announcing shortly for those 2 buildings in Newark that will actually travel with us and probably be a part of our Teachers Village projects as we go into other markets. But we've built the largest indoor vertical farm in the world in Aero Farms in Newark. We're doing an amazing project now with the Rutgers Honors Living Learning College in Newark, a special school created by Chancellor Nancy Canner of Rutgers Newark. This is her brainchild. She really created this unique school to be able to recruit. It's not, recruit students from urban areas and community colleges, this multi-generational cohort, and created, sort of this a social infrastructure, and educational infrastructure to make sure that they make it through the 4-year college and make sure that they succeed in the 4-year college. The bureaucracy that a campus and a university campus can be, and we take for granted, with just knowing a few people on campus, how that helps us navigate that. She created this unique school at Rutgers Newark. We were privileged to build their first home, so we're finishing that up. We have a bunch of social impact related projects. Teachers Village is moving into other markets. So, Teachers Village Atlanta's on our boards. Teachers Village Miami we're working on, and again Chicago, and we finished Hartford, and Stockton as you mentioned. So we got a bunch of projects. We incubate them in Newark, and then we bring them across the country. And most of the stuff that we're doing now will be some sort of appendage to Teachers Village, some sort of concept that works with those capital stacks that we could offer workforce housing to other communities and to other cohorts, and create some other kind of community benefit to the projects beyond Teachers Village, while we enhance Teachers Village. So we spend all day thinking about the programming and how the educational components of it, and how do we create a value-added experience for our teachers. It's not just housing for them; it's really creating a value add for them. And the more we have, and the more we build, and the more time we're at it, the better and better it gets. Yeah.
I tell you what, you've been fantastic, sir. How's people, if they want to learn more about projects, want to get involved? How do they? Where do they go? You got a website?
Yes, we have teachersvillage.com, and we also have RBHGRP.com. So www.teachersvillage.com, and then www rbhgrp.com.
Okay. We'll make sure that we get that posted in all of our social media world, because I think a lot of people can learn from you. You've been one of the pioneers. Love your passion. Love what you're doing. Appreciate your time. And I'd like to do this again some other time if you would be up to that.
I'd love to, Jim. Good luck with the book. It's
thank you.
Very important work. Opportunity zones are so important. And that perseverance you had to make sure that I got on is the same perseverance you'll need to develop an opportunity zone. So you
I don't know. I can't say anything. I can't do any better than that. So
right.
That's a good way to end. Yeah. I love it. Ron, you're absolutely a gentleman. Thank you for your time, and I really thank you for your support, and thank you for all you're doing. Okay, and we'll talk soon.
Talk soon. Right? Good luck with the book.
Thank you for your participation and interest in Jim White's Opportunity Investing webinar. To stay in touch with Jim, please go to www.opportunityinvesting.com.